Hi, I'm Adam,
This is Kevin.
and we are Tech Guys Who Invest. This is the place for business people and investors to learn all about investing. We offer a fresh perspective on what it's like to have a day job while investing, and we share lessons learned on our investing journey. Our vision is to educate and entertain you while adding tons of value to your daily commute. Welcome to our show.
Welcome, everybody, to another episode of the Tech Guys Who Invest podcast, where each week you learn how to invest wisely and safely. Because of our guest today, you're going to learn how to invest with your left brain. In fact, Brian Dress is the Director of Research at Left Brain Wealth Management. Brian has 15 years experience in the investment industry. Before joining Left Brain, he spent nearly a decade managing an independent portfolio of derivatives, focused mainly on the oil and gas and commodities market, but also in equities and fixed income. Brian earned his BS in International Relations with a concentration in International Economics from Georgetown University in Washington, D.C. He is currently a candidate for the Chartered Financial Analyst designation. Brian is a resident of the city of Chicago, where he resides with his wife, Michelle, and his young daughter, Juliette. In his spare time, he enjoys spending time with his family, working out, cooking, and traveling. Without further ado, here is the interview with Brian Dress. Welcome, everybody, to another episode of the Tech Guys Who Invest podcast, where each week you learn how to invest wisely and safely. Our guest today is Brian Dress. He's the Director of Research at Left Brain Investment Research, and he's also an investment advisor. So welcome, Brian.
Gentlemen, great to be with you today.
Yeah, Brian, we're really excited to have you on the show and really looking forward to what we're going to talk about today. So let's kind of start with, why should people care about financial literacy?
Well, I mean, the only way you're really going to fulfill the goals in your life from a financial perspective is really taking ownership of your financial life. At a Left Brain, we have a tagline. It's called creating wealth, building wealth, and preserving wealth. And so, you know, our day is dedicated to doing that for our clients and for those who are seeking out our research. The reality is kind of at the bottom line of it is we're in the business of helping people achieve financial goals. And that's, you know, comfortable retirement, education, charity, or other goals like that. And, you know, it's really important. And, you know, the only way to really achieve those goals is really to take control of your financial life. And so, you know, we do that for our clients, but we also are in the business of trying to educate the general public to find ways to achieve those goals, you know, through financial investment.
Totally makes sense. And with all the things that are out there, you can invest in this, you can do this, right? I feel like the news throws out, hey, the newest investment you can make. And for me, it's like by that time, it may be too late, but that's my own personal opinion. That financial literacy, I feel, helps you create that filter for yourself. Like, okay, maybe this does fit my identity. This does help me achieve my goals. Is that one way of thinking about it as well?
It is. And, you know, it's important that you brought up sort of the financial media and kind of how that all plays into things is, you know, there's a lot of noise out there, and, you know, taking in a lot of that financial media and what you hear out there really complicates matters in terms of making the right decisions for yourself, financially speaking. And, you know, at Left Brain, we're very long-term oriented. And so we spend a lot of our time trying to figure out a way to block out that noise. And we take a lot of calls from clients worried about, you know, what did the stock market do yesterday? And our job is really to hold them, you know, under control and say, hey, listen, you know, yesterday may have been a bad day in the market, but that doesn't change, you know, the quality of the businesses that we follow and that we invest in. And so it's important to sort of maintain perspective. And that's what we're really trying to achieve.
Gotcha.
Yeah.
Okay. Hey, you mentioned one thing there that's key, that long term. Why is that, right? I want to make this quick buck now, or I want to arbitrage or do something crazy like GameStop or something like that. But why is there an emphasis at Left Brain on long term?
Well, it's, you know, the reality of the stock market and other financial markets is it's sort of a random walk from day to day or week to week. And what really wins out in the end is the best businesses. And so, you know, 10 years from now, if I invest in business A that I know is a tremendous business, but might be sort of on hard times or not, stock price not appreciating super quick, that's going to be better than looking for, try to make 10, 20% in stock B over the next month. And it's really difficult to do that sort of the first time out as an investor. But I think the more experience that you gain, the easier it becomes, and sort of the feedback process, you start to understand, looking at the long term is the best way to take advantage of opportunities. And we can talk about this as we go along, but in my own professional career, I started as a trader, and for almost 15 years, I did trading more of in a short-term basis. And, getting caught up in the day-to-day movements of stocks, I took myself out of so many good opportunities and investments. Now looking back on it, I really have so much regret in terms of that. So, from my point of view, I really want to help others understand that really the way to go is, look for 5 or 10 businesses that you can really believe in, and just write it out as long as things are going well from a business point of view.
Yeah, that's interesting. And also, Brian, you've mentioned a couple times already, and people will discover as we continue to chat here, that you're really focused on investing in stocks, and we, as you know, are more real estate investors. But Kevin and I love to have people like yourself on the show to educate our audience, because we like to talk to our audience about educating themselves, really making sure that they understand what they're getting into. And that's what we really liked about your organization, and why we wanted to talk to you, is we know you're also really big on education. And to us, that's actually more important than what asset class you decide to focus on. So could you talk to us a little bit about that? And maybe what are some ways to educate oneself about finances to make sure you can make those good decisions that'll lead to developing wealth over a long period of time?
Sure. And I would say before we get started with that is we like real estate too. And it's definitely something we invest in through what we call real estate investment trusts, or REITs. So there's a stock sort of way to do that as well. But in terms of educating yourself about finance, the first thing, that the most important thing, is you just have to read. You got to read books about personal finance. There's so much investing literature out there about sort of how the best investors have done it in the past. And then there's all sorts of contemporary literature, and that's the type of stuff we put out. In addition to our subscription service, we also have some free educational pieces out there. From our point of view, the way that wealth is managed is not ideal, has not been client oriented for a long time. And we really want to get out there and educate people that there's a better way to do it. There's a sort of indexing that's creeped into the investment business. And of course, if you don't know anything about stocks, I think it does make sense to index. But, it's really hard to see advisors out there charging, a huge fee for just putting their clients in a few, mutual funds. And so like you guys, we really put an emphasis on educating not only our clients, but we want to educate the broader investing public of what the opportunities really are out there. And so, we agree with kind of those personal finance tenets that are out there of course, remove debt, maximize your savings. But, what we do is what we can control, which is investments and investment returns. And, we could talk a little bit about this, but the math behind, if you can just raise your investment return by just a few percentage points, the power of compounding is so powerful that it really is a compelling concept. And so these are the type of things we would encourage investors or those who are novice to investing to read about in their studies.
Yeah. And, that's interesting what you said about if you can increase it just a few percent, it can make a huge difference. And I think it's one of my biggest problems with the way a lot of like 401ks and the mutual funds are kind of set up, because I think there are a lot of hidden fees in there that are almost impossible to understand, and they're obfuscated, I think, on purpose. that really can take away from a person's returns over time. So, working with someone like you and your team to understand how to maximize their investment and how to understand it and not just blindly throw money into something that's managed by a financial advisor. I'd love to hear that.
Yeah, we just, hate that concept. And it's also from the business point, and this is why we started the subscription services. We are unusual for a company of our size. We have a staff of about five investment analysts that I manage. And we actually select securities, whereas, companies of our size generally will put you in mutual funds or use third-party managers. And, that business model is not going to continue for long. I mean, I think people are smart enough to realize that what are you really getting for that fee you're paying? As advisors, we want to continue to be able to charge fees to our clients, but we want to provide value over and above what we're charging them. And that is not what is going on in the lion's share of wealth management businesses out there. And that's sort of kind of the education that we're trying to help, people on both sides of the transaction. People who use advisors, we want them to understand more about what they're buying. And then also advisors, we want them to, come along to our way of thinking, which is find a way to incrementally increase people's investment returns and really help them achieve their goals.
Love it. And speaking of, we're talking about fees, talking about what things are happening in the space right now. One thing that seems to be pervasive, I would say, are these gurus. Even if you're investing in real estate or you have these trading gurus that are talking about buy my course, things like that. What are some of those like red flags that people should be aware of? Like if they're promising this return or something like that, well, what would you say is a red flag to say, all right, maybe you should pump your brakes and not really go that route?
I mean, I think you just have to use common sense. We all kind of understand what the hard sell techniques look like. The fast money, you can, double your money in 6 months. And, I see all these guys on Twitter. They're out there, these gurus. We all understand anything that's worth having is difficult to achieve. So, let's stop trying to chase that quick buck. I spent, I spent more than a decade trying to chase that quick buck where I could have just, bought into 5, 6, 10 terrific companies and just sat here. And the reality is that's the hardest thing to do in investing, but, really caution people to think more about, again, the long term and sort of the short-term focused stuff is not replicable over the lifespan of an investor.
Yeah, nice.
Totally agree.
So, Brian, I think one of the reasons some people don't take a little more active role in taking control of their financial future is they're intimidated by, financial reports, which can seem complex and confusing, or, maybe they're not numbers people. They just have this stigma that finance is scary and not for them. How could somebody like that begin to educate themselves and sort of start to take control? Because it's so important that everyone does this.
Sure. So again, like if we're talking about someone who's thinking about choosing an advisor, it's about asking the right questions and, kind of the stuff we're talking about. Do you look at things in a long term? Do you have high fee mutual funds that you're going to put me in and that sort of thing? But sort of taking it a little more deeply, again, reading is the most important part. I wouldn't say that following companies is easy by any means, but when you get started, it's pretty straightforward and simple. But of course, I understand, like when you haven't done any of this, it doesn't seem that way. So what I would tell someone to do is kind of choose a company that you're familiar with or that you know pretty well, and then go back. And there's so much public information on any publicly traded company. I would tell them just go back and read the last few earnings conference calls and just start kind of understanding, how does this business work? Like what are their inputs? What are their expenses? How is their revenue growing and all of that stuff? And it's all in pretty simple language. These companies want to help you understand. They want you to invest. And so they try to break it down for you in a pretty simple way. Of course, all the numbers and all that stuff can get a little bit more complicated. And that's something you can get into more as you learn more. But again, I would just say, hey, read the last few conference calls of a company you understand, and I think the pieces will start to fit together. Again, like every company is subject to something called Regulation FD, full disclosure, which means they have to disclose information to all investors equally. And so that means there are really very few secrets out there, despite what many people might tell you, or trying to sell you something saying, hey, only I can tell you how this works. And we'd also say that Wall Street kind of looks at things way too mathematically. So it's kind of like this price target thing, this concept of, this stock trades 50 times price to earnings and things like that. Again, it's all kind of short-term oriented, but really if you can like talk about a business, say Amazon 10 years ago, I mean, I don't think it would have been a huge stretch to invest in Amazon 10 years ago. But, if you get caught up in, hey, this stock trades at $1,100 a share, I can see why it would be an intimidation to say, I don't want to get into that. I don't want to invest in that. So I would caution people about getting too into the numbers and think more thematically about how an investment or a company works.
Got it. And there's a point that you may mention there that Adam and I always advocate for is you don't invest in things you don't understand. So even if you have money and you hear that, oh, all of my friends are doing this, maybe I should invest in that company. Well, do you understand that company? Do you understand what's going on? I think that's a big message that I'm gathering from you.
Yeah, I totally agree. I mean, if you can't explain sort of the business model of a company, then I don't think you really have any basis for investing in that company. And I don't mean you got to know everything or understand every number or detail, but I mean, if you can't explain to me in a minute, sort of what does this company do? And this is kind of like we invest in a lot of cloud computing companies. I think there's a lot of investors that say, oh, this is a cloud-based software company. That's great. And that's sort of where the conversation ends. You definitely have to dig a little bit deeper than that.
Sure. I totally agree with that. And when we're talking about digging deeper, right, one thing from my personal experience with like a 401k is you don't really have many options.
Right.
And so my question is, how do you go about digging deeper with the options that are provided for you? Should it be questions that you should be asking yourself, maybe terms that a full-time employee should be looking for? What would you say to that?
It's more difficult, and it's, what we do is of course select securities. So it's harder to answer, but for like a younger person, I would definitely say just be more aggressive. And if you have sort of like the opportunity to invest in like the NASDAQ or the S&P 500, you're probably going to do well. I mean, I think we can all agree that, the United States is a tremendous country for growing wealth and business environment and sort of things like that. And so if the only option that you have is to sort of invest in S&P 500 type of index funds, I think you're going to do just fine. I think the younger you are, the more aggressive you can be. And even if you're not the most risk-seeking type of person, I think you need to push yourself to at least invest in sort of the broad stock market, because history is on your side. And we have, the future's bright in the US. So I would definitely tell people, hey, and there's a lot of risks in sort of safe investments as well. Of course, if you buy bonds, it's going to pay back if you buy, government bonds, but inflation comes into play and things like that. So if you're young, you have a lot of time to make it up if the market does badly for say 5 years. Pretty much any period of time over the last 100 years, if you hold stocks for 25 years, you're going to do well.
Gotcha.
Brian, there seems to be a widening gap between the wealthy and the poor in this country. And it almost seems like the middle class is shrinking. I was wondering if you had thoughts on what someone can do to kind of ensure their financial abundance over time, to sort of make sure that they grow their wealth rather than becoming poor and not having enough.
Sure. I think this conversation gets pretty frustrating from my point of view sometimes. Like, you hear all these kind of personal finance people out there, that talk about, the bootstrap mentality and, really dig yourself out if you're poor and things like that. And, let's acknowledge the reality. If you're, in the working poor or something along those lines, it's really hard to use investment to get out of that. So I think we should really acknowledge that and sort of stop the nonsense of anybody can do this.
Right.
I think, at a certain level of income, kind of where our expertise comes in, if you can find a way to just save a few $100 a month, and just get in the habit of throwing some money into the markets or some other kind of investment that is going to grow over time, I think that's the way to go. And again, it's hard to do for the first time, and it takes experience to understand that maybe you make some short-term losses, but if you just write it out with strong businesses or like we said, investment in the stock market in the US, it's going to work out in general over time. But a couple of things, let's talk more about that subset that we can help. I would tell people, don't try to time the market. There's a lot of people that it's an ego thing, maybe if I stick around, hold my money for 6 months, it'll come down and I can get, buy some stock at a better price. The results of that strategy are really bad. And you can look anywhere to find that out. Even the people who are, quote unquote professionals are bad at it.
It's so emotional.
It is emotional, and it's, when I was younger, I felt like, and again, I was a trader. So short term, I thought, I was making my living on getting in and getting out. But looking back, it's just like how insane that was to think I could do that.
Right.
But you lose perspective, and that's why I don't really like how the financial media goes, because it's so noisy. Like if there's 3 bad days in the market, it's like, God, we got to sell everything. And it's just like, no, that is the exact opposite of what you should be doing.
Yeah, because I think what people forget there is that financial media it's really for entertainment. I mean, it's designed to attract viewers. It's not really designed to give solid financial advice or news. I mean, people who are smart go to people like you. They don't watch TV for that.
Right, exactly. And, so I would just say, like, let's keep it simple, put your monthly 500 or 200 or whatever it is, get started, and just, and then the reinforcement of you see it grow over time, I think it becomes easier. And then I'd also mention this, the way the wealthy invest is they buy when people are panicking. And, this is something that's been hard for me in my career. Like when I was in my 20s, super hard to buy, you read all these books. Hey, Warren Buffett says, buy when there's blood in the streets. And that sounds great. But when it comes to the time of doing it, it feels terrible. But again, it's like experience helps. So you do it 1 time, you do it 2 times, you do it 3 times, and then it becomes second nature. And so you stop riding the emotional tides that everyone else has. And what you start to realize is it's an opportunity for you when even though you're invested, say you have all your investment money in the stock market, but you might have a little bit of cash on the side. If you have a long time horizon and stock prices come down, that's an opportunity for you to buy. That's not a reason for you to panic and sell.
Yeah, totally can see that.
Yeah.
So how do you remove the emotion? I mean, the only thing I can think of is just having a discipline, right? And but you can't, sometimes you can't muscle through the emotion, but I'm curious to hear from your perspective, what you would say to that.
It's always hard. I'll be completely honest. I have a friend that I used to work with in the trading business, and we talk all the time, and trying to help him have kind of a similar conversion that I had, which was into long-term stock investment. And we always talk like last couple of weeks when the stock market was off, it was like, oh, this feels awful. But you know what? It's like what you really need to be doing is shopping for the best businesses that you like. And it's almost like you need like an emotional support structure to do it. But like I said, it gets easier time after time. But I would like to just encourage people to try to take that leap for the first time, and then you start to get that feedback. It really does become easier. Um, you just have to sort of maybe write down what your plan is and try to stick to it. And each time you're going to stick to your plan a little bit better than you did the time before.
Well, when we're talking about that time horizon there, you talked about, I think, trying to think that future thinking, if you will. Just curious, where do you see big opportunities in the next 1 to 3 years?
So we're always kind of looking for tech investments, growth investments more broadly, but that takes us to tech pretty much all the time. The last 20, 25 years, I think that's really been the best place to be. And, we all know that even sort of the most smokestack type of companies are trying to become more technological in their orientation. So, that's where we're looking. Okay. So the biggest opportunities we see in 2021 and kind of the next 5 years are, one, in cybersecurity software, and two, in 5G and sort of the rollout of 5G. And so we really see big opportunities in both of those sectors of technology. So cybersecurity, I don't know if you guys followed this, but the SolarWinds hack that happened about 3 or 4 months ago was basically a shockwave in sort of the cybersecurity world. And, we've been following cybersecurity the last couple of years. And then when COVID forced everyone to work from home, the threat really increased exponentially. And, what happened with SolarWinds is now governments and companies realize, hey, the vulnerability is profound. And we also know that companies traffic in data, from sort of even like your food and beverage companies all the way to, the most technologically savvy software company. Everybody's trafficking in data. And so the bad guys want your data. And so the reality is it's not an optional expense for any business. And so that's what really shows us that cybersecurity is really crucial. And then, so I would mention one company in cybersecurity that really stands out for us, and that's CrowdStrike. That's CRWD. And I think it's a good illustration of kind of what we look for in a company. So there's like 5 or so characteristics of a company that we really want to invest in. So we're looking for companies that have sales growth that's accelerating, growing at a faster pace. We're looking for companies that are becoming more profitable or becoming profitable. We're looking for companies that operate in growing markets. So like we talked about, cybersecurity is a growing market. And then we're looking for companies that have world-class CEOs that potentially may have been founders of the business. So those are kind of like what we're looking for. And CrowdStrike really fits into that because they've got a great CEO. He's been coding since he was a young kid. He sold the business already to McAfee. And so we're looking at a serial entrepreneur. And everyone in CrowdStrike's network benefits from threats neutralized from other clients of CrowdStrike. So they're looking at over 1 trillion data points per week. So it's really an amazing business. And then also the revenue growth is over 85%, which is just insane. So these are the type of things that we look for in a company. And that's a great example of a company that we really think is a great opportunity.
Yeah, that's interesting. And speaking of looking to the future, right now the Fed is printing money at an unprecedented rate, and many people are predicting inflation coming pretty severely. What's your take on that? What do you think people can do to prepare for that?
Yeah, so we have a securities evaluation application software that we coded in-house, and we call it Jarvis. And every week I run some numbers and output from Jarvis. And so we're looking for trends. And so the last 2 or 3 months, it's just been flashing red light or green light, whatever you want to call it, for inflation. Because we've seen, oil prices are going higher. We're seeing metals prices, housing,
Lumber.
So many, yeah, exactly. Inputs to housing. So inflation is definitely a concern or a risk, but I also want to be cautious about being too overly concerned about inflation. Because if you kind of look back at the history of the market over the last 20 years, I remember back in 2008, 2009, when it was like all this talk about hyperinflation, the Fed's printing so much money and this, that, and the other thing. But I think the reality is I like to try to tune out this hyperinflation brigade because I think their view is more ideological than anything else. And I think it's important when you're trying to invest, you got to take like politics and ideology completely out of the picture. I mean, we all have our opinions, but it can really destroy kind of your strategy. And so there's a couple of things in terms of how I would say you should position yourself for inflation or the possibility of inflation. The first problem is bonds. So a lot of people use the 60-40 portfolio of 60% stocks, 40% bonds. That's sort of the conventional wisdom of wealth management for decades. And people look at bonds as safe investments. And like I said before, so if you own a US Treasury bond, it's safe. Like you're going to get paid back your money. But what inflation means is if you get paid back 10 years from now and there was inflation, well, the money you get paid back is worth so much less. So I would sort of caution people from just thinking, hey, I'm in bonds, so I'm safe. So we've been trying to help our clients be more creative about how they look for income securities. So we're trying to help them, maybe invested REITs or MLPs or other like dividend paying stocks that create kind of a bond-like return structure. Just because the risk reward for bonds is really not good in today's market. And then the second thing I would say is growth stocks. Growth stocks are the best place to be. There's been this sort of narrative around the financial media that, as 10-year interest rates go up from maybe 1.3 to 1.6 to 2%, that's really going to hurt growth stocks. And we think that's really overblown. We think that's sort of based on this like Wall Street mathematical equation of, how do we discount cash flows and that sort of thing. But let's be realistic. We just talked about CrowdStrike. They're growing their business at 86% per year. If there's 6% inflation, that compares not at all to the 86% growth that you see there. So for us, the best place to be to deal with inflation is to stick with these growth stocks that have a world-class business and are on a trajectory to continue becoming, some of the titans of the business.
Love that. Totally love that. And that's where you look at the research, you look at the full disclosures, see what the other experts are saying, and really use as much common sense as you can. I love that you talk to experts like yourself. I think that's a big thing. And when it comes to grasping your own knowledge, what books would you recommend for somebody, or maybe books you've gifted to friends that say, hey, look, this would be a good book that I learned from. I think you would benefit from it.
So there's this really old book. It's called 100 to 1 in the Stock Market. It was written in 1972. I don't remember the name of the author, but I read this book when I joined Left Brain. And when I left trading, I was trying to figure out a way to stop thinking about just tomorrow and start thinking more broadly. And this book sort of talks about all these stocks that went up more than 100 to 1 in the Great Depression. Wow. And it sort of starts to open your mind to, okay, maybe if I find 2 or 3 of these businesses in a lifetime, I can really create something special. And, instead of trying to figure out, do I sell the stock at 18 or 21? I start thinking about more like, hey, this business could be around for 30 years. And I think it's important sort of in my own experience. I remember selling Apple stock when it was $80 a share because I was looking at some charts. I saw some resistance on the chart or whatever it was. And, if I just held on, I would have 35x of where I sold.
Wow, man.
And so it's super hard in the moment to think about things like that. But then experience gives you perspective. And it's like, let me slow down my decision making and really think about what matters. So that's what I would say. That book called 100 to 1 in the Stock Market. You might have a hard time finding it, but it was written back in 1972 in the old days, but it's awesome.
So, Brian, you mentioned those 35x returns that you missed out on, and that just kind of inspires me to ask you what you think about Bitcoin.
Oh, boy. It's so hard. It's hard to argue with success, right? People who have invested in Bitcoin have done amazingly well. And I think there's some value in the technology behind it, but guys, I have no idea how to value it. I don't know what it's worth. There's no cash flows. There's no management to assess. And so, we follow it. We have some exposure to it sort of through companies like Square that are involved in the technology. But we try to stick to what we know, and that's world-class businesses. And so kind of have to punt on Bitcoin for you guys.
Totally understood. It's the same thing. Why would you invest your clients' money, your money, if you're not totally comfortable and understand the nuances to the degree that you're comfortable with? So I totally see where you're coming from.
Completely. And there's so many amazing companies out there. I know a lot of people have made 100 to 1 in Bitcoin, but like we just said, there's ways to make 100 to 1 in the stock market too. You just got to do a little bit of research. And I think Bitcoin kind of falls into this kind of guru economy out there. It feels to me kind of like when I'm pitched Bitcoin, it feels like gurus are telling me, you got to check this out. You can make 4x in 6 months or whatever. One, I don't know if that's true, but two, that's possible in stocks too. You just have to find the right ones. But again, it's sort of running against the grain. It's in the news. But I think there's other opportunities that are much more predictable. Let's just say it like that.
And speaking of things that are unpredictable or things that potentially would disrupt the industry, how would you say technology will disrupt the financial industry? Like, what would you say your predictions are around that?
It's definitely in the mix. Like I mentioned, we follow Square, we follow PayPal. I'm not technically savvy enough to sort of know the ins and outs on how this is going to work, but I do know that sort of the traditional financial companies haven't done that well in the last 10 years. And you see companies like Square and PayPal just taking so much market share every single quarter. So I think that's sort of where my head is at on it. Traditional finance has its place, but it has its old tenets that aren't, perfect. And it's ripe for disruption. There's a lot of juice in the system that, I think technological firms are right to try to disrupt. And at Left Brain, we kind of look at ourselves as a tech firm too, that just happens to work in the financial business. And so we gravitate toward companies like that, like ourselves, that are trying to find a way to address the financial business in a novel way. And that's why we like companies like Square and PayPal. And I'm sure there's many, many more behind it coming up. And those are the types that we try to identify with our research as well.
Great. Brian, it's been so good having you on the show. We've really enjoyed the perspective you've shared. It's nice that it's a little different from real estate or some of the things we normally talk about. So really appreciate having you on. Now, if people want to get in touch with you, where can they find you?
You can find us here at leftbrainir.com. We have subscription services. So we have been in the wealth management business since 2014. Like I said, we're unusual in terms of a firm our size that we produce research. And we've decided to start selling that research to the general public last year. And so that's at leftbrainir.com. And, for your listeners, we'd like to offer a special offer for anyone using the coupon code TechGuys25. That's all caps with 25. you'll have 25% off a lifetime of subscriptions on our site. So that's where you can find us, leftbrainir.com. And there's also some really good free educational content on there too. So like we said, we want to educate the public, whether they work with us or not. And then we have a special Zoom event coming up on April 8th, 5 Eastern, 4 Central. It's called Fortune Makers Wealth Builders Edition. We're going to talk about 3 companies that are in the small and mid-cap area that we think have what it takes to potentially become large cap major players in their industries. So that's free for any subscribers to our subscription services, but $25 for those who aren't subscribed. And you can find that on Eventbrite just by searching our name, Left Brain Investment Research.
Awesome. Thanks so much for that, Brian, and really appreciate the special offer to our listeners. We will be putting all of that in the show notes for folks. So once again, thanks so much for coming on the show.
Yeah, it's been a fun time. Thanks a lot, guys.
That's it for this episode of Tech Guys Who Invest. This is Adam.
And this is Kevin. Thank you so much for listening to us. Don't forget to join our Facebook page where we're building a community of investors so that we can share ideas, tips, and other ways to help us get out of the rat race. If you found value in this podcast, it would mean the world to us if you could share it with your network. Lastly, we love feedback. It's how we get better. So if you wouldn't mind spending 30 seconds and leaving us an honest review on iTunes or Stitcher or whatever platform you're using, that would be super sweet. If you want to get on Adam or Kevin's calendar, go to tgwipodcast.com/contact. We want to help you invest safely, wisely, and ultimately get you out of the rat race. Thanks again.